Welcome to Tesla Stock Daily Drive. I'm Dusty, your guide through the ever-evolving landscape of financial markets, with a special focus on Tesla. Pull up a seat, and let's dig into what's shaking up the economy and, of course, our favorite electric car innovator. We kick off today's journey with a look at the global market waves. Last week saw an unexpected rally, sparking optimism as major indices rebounded, turning 2025's earlier losses into gains. This rally was fueled by a 90-day ceasefire in the US-China trade tensions. Yet, while the surface may seem calm, there's a current of unease. President Trump's trade policies still cast long shadows, with consumer confidence nearly scraping rock bottom. Many companies in the S&P 500 can't seem to escape the tariff tag, dampening full-year earnings expectations. Inflation might seem like a sleeping giant, with softer-than-expected figures suggesting tariffs haven't significantly stoked price fires. But Walmart throws a cautionary note into the ring, warning that those rollbacks could be threatened. Eyes are peeled for earnings from retailers like Home Depot and Target, as they may hold clues about the broader economic pulse. Adding to the uncertainty, Moody's delivered a sharp jab by downgrading the U.S. credit rating, citing the nation's ballooning debt. Now, let's shift gears and talk trends for 2025. Deloitte forecasts the rise of AI in finance, the shift to real-time data, and a spotlight on cash flow management. Central bank digital currencies are moving into the mainstream, while sustainable finance products gain traction. Yet, banks may face choppy waters with sliding interest rates and geopolitical tremors. Turning our lenses to Tesla, the stock's been riding a 4-week winning streak, though the pace dipped after their post-earnings rally. By May 15th, the stock sat at $349.98, up by just over 2% that day. However, the sentiment surrounding Elon Musk isn't as stellar. Wall Street's warm glow for him appears to be dimming, with whispers of his behavior possibly affecting global sales. Philippe Lafon's Coatue management made waves, offloading a hefty 600,000 Tesla shares. Barclays' Dan Levy keeps a cautious eye, holding his ratings steady amid mixed reactions to recent stock surges. The Cybertruck, one of Tesla's star attractions, is navigating a rougher road. They're now accepting trade-ins, but the depreciation? It's been described as insane, with 1 year seeing a 34.6% value drop. Inventory seems to be gathering dust, prompting Tesla to slice prices deeply. Operationally, Tesla's bet on California remains strong, symbolized by renewing an 82,000 square foot lease for their Santa Monica service center. Yet, beneath this ground, critiques bubble. Questions about their revenue structure and competition from emerging EVs are piquing interest. The Cybertruck, despite its futuristic flair, faces hurdles in sales agility. The turbulence doesn't end there. A movement branded as #TeslaTakedown has emerged, aiming to sway Tesla stock to allegedly stop Musk from damaging democracy, a storyline that's hard to ignore in today's hyper-connected world. Let's take a moment to remember the sad news of a fatal accident involving a Tesla on a rain-soaked highway in Utah, a reminder of the complex realities these vehicles navigate. As we steer towards the end of today's drive, keep in mind the landscape ahead for investors. Watch those economic indicators closely: unemployment claims, housing sales, and the financial tremors they can cause. It's a year for cautious optimism, embracing technological advancements while keeping a cool head amid geopolitical uncertainties. Thanks for tuning in to Tesla Stock Daily Drive. I'm Dusty, reminding you that when the dust settles, only the truth remains. Keep listening and drive safely.